It's Brian Preston, the money guy.
So the first thing I want to talk about is let's talk about what market timing is.
Oh, that is one of my favorites.
I mean, this is the cycle of market emotions.
Right.
And what I like about when you talk about the market, the cycle of market emotions, I just dropped it for all the live viewers, is that you get to see, the euphoria, the optimism as you're going on the upside, but then you also see how people freak out and panic when things are in a down market. And what this appeals to is really the two sides of human nature. You've got fear, which is you don't want to lose what you already have,
right.
and us as humans, we have a strong, fear of losing money and just don't like pain, don't like suffering. So that stuff sticks out to us. The other side of human nature, though, is greed. Is that when we hear about it, remember that friend who comes up to you at the cocktail party and tells you how great things are, you probably are starting to feel like, man,
I got to get a piece of that.
I ought to be in that too. So, and the thing about market timing is that it hits you on both sides.
Right.
If you're market timing during a good market, you're trying to get some of that irrational exuberance. You're trying to buy while everybody else is getting all frothy and excited. That's the greed that's kicking in. But then the other side of it is when things are really scary and markets are losing, the headlines every night are talking about how much people are losing in the financial markets. There's a lot of you that are just thinking, well, I've got to I got to seek comfort and get the heck out of this thing. And that's the fear that kicks in. What's bad is that you can miss this on both sides.
That's exactly right.
So it's better if you just get a good plan of action and avoid even trying to. You learn how to control and foster the fear and greed and the market and the emotions that you face.
And I think a lot of people struggle with this. They think, oh, well, I'm actually not a market timer. I'm actually really risk averse. I don't really try to time the market. But after 2013, I started going to cash because I recognized the market was doing pretty well, and I'm just waiting for that double dip. I'm not a market timer. I'm just waiting for that double dip. I'm waiting for the opportunity. Well, that in and of itself is kind of market timing. If you're somebody kind of sitting on the sidelines waiting to deploy the cash, you fall into this category. And so we're kind of speaking to you today.
What's the famous Peter Lynch quote that I like?
Peter Lynch he had a great quote. He says, far more money has been lost by investors preparing for corrections or trying to anticipate them than has been lost in corrections themselves.
And that's really the setup for today's show.
Right.
I mean, and the good news is you guys out there in part of the Money Guy family, you're financial mutants. I mean, you're the type of people I think that when the market gets beat up, you actually get excited, not because you're fearful, but because you're thinking, man, this is when I can get the best opportunities. Right. And that is when you look at our cycle of market emotions, you see there's 2 points of paying attention to is maximum point of financial risk, which is during the euphoria.
That's right.
And then the point of maximum financial opportunity right here between right at the bottom of this thing between capitulation and depression.
Yep.
So it is, you guys are the financial mutants. I love the contrarian in you, but still I worry about those because we've seen this, and Bo, we talked about this when we were doing show prep. The worst thing that can happen for somebody who thinks about dabbling in market timing is to get it right in the beginning.
That's right.
I mean, because your first trade out the door, where you sell maybe before a downturn or you buy right before a big run up, you think you are so smart.
That's right.
But there's a lot of, as we've learned, there's a lot of, you don't control what direction the market is. Anybody who tells you they know what's going on, whether it's the talking heads on TV, they don't really know what's going on.